Hey guys, it's Josh. Welcome back to the channel. Today I'm going to be showing you guys exactly what is inside my $20,000 portfolio as a 20-year-old. I'm making this video to show any new or returning investor, young or old, the power of consistency over time. I'm going to be breaking down all my current holdings as well as anything new I've added over the course of this summer, and I'll explain how this portfolio pays me passive income, so stick around to the end of the video for that. So, quick background for anyone who is new to the channel. I've been investing for about 5 years. My channel mainly focuses on finance, entrepreneurship, and the stock market. This video is a follow-up to my original portfolio update from just a couple months ago. Not here to waste any time, so let's go ahead and jump over into my Robinhood portfolio. All right, we have my Robinhood dashboard pulled up. If you're interested in getting started into investing or you want to switch brokerages, use the link in my description. It's completely free, but as you can see, we have $20,037.63 as of recording today, $36.61. So, like I said, for anyone new, 5 years of investing, I started off with just about $100 in this account, and over the past 5 years, I have grown it to over $20,000. So I want to start at what was the month low for July. So the month low for July was actually $19,825.01. So as you can see, we're not that far off from our month low currently, but this month wasn't massive for me. But the month high for July was $21,600.12. So that is really awesome. The portfolio is growing at a great rate. Now, obviously, if we pan out to the 1 month window here, it's going to say we are down 4.25%. But again, Robinhood kind of ignores any capital you have added in, which I will talk about exactly how much I made in just a second here. But yeah, down just about 4% this month. If you guys saw any of my videos earlier this month, I did a stock trading challenge. Didn't go as well, kind of blew up the portfolio a little bit, but that's okay because we're here to have a good time. And again, I'm young, I have time for risk, but pretty soon here we want to get into the holdings. And I'm going to tell you exactly how much I invested so then I can tell you what holdings I put that money into. So for the month of June and July, as this is kind of a summer 24 combo video, I invested just about $3,800 of my own money. Now, as a 20-year-old, you might be thinking that sounds like either a lot or a little. For me, it was a lot. I had a job this entire summer, and so I was very consistent. I put half of every paycheck into the stock market. And so if I zoom out to this 3-month timeline, it might make a little more sense. So as you can see, May and most of June actually were steadily increasing months. And then we hit July right here. And so really, this past month window right here has a little bit of a dip, but $3,800 in investment and roughly 7% appreciation. And then you tack on the little bit of passive income in the form of dividends that I will get into later. That evens out to just about $20,000. So for anyone curious to how and why exactly I got into investing and now what is eventually accumulated into $20,000, make sure to watch my previous video to this as it'll give you a lot more insight. This one is just going to be about the update for summer 24. So with that being said, let's get into my positions. We'll start up top at my options section. Not going to spend a lot of time here, but options are essentially tools within the stock market to increase your amount of leverage while also increasing risk. Plenty of videos on my channel about that as well if you want to check those out. But starting at the HIMSS 23 call, this is a medical company that does weight loss drugs and things like that, and their earnings are coming up. I project that they will make a lot of money, more than even analysts are predicting, so I have that. That's kind of just for fun, you know, again, we have to have some risk in this portfolio. Then next up, Chipotle. As you can see, I have another contract here. I'm not going to talk about that one too much, kind of the same thing as the HIMSS. We're playing earnings, kind of some risk. And then moving into my actual stock positions, what most of you are probably here for. So my largest holding by far is VOO, which is the S&P 500. Now, if you saw my video a couple months ago, I've actually accumulated a couple more shares. So I would say roughly 40% of my $3,800 has gone straight into VOO, simply based on the fact that I believe in this and that most of my portfolio, roughly 70% of my portfolio, is just in the S&P 500. I tend to be a more buy and forget type of investor, and so for me, this really works. None of this is investment advice, obviously. I'm a 20-year-old idiot. Next up, we're moving to VGT. So this is similar to VOO, VOO, except for the fact that it is technology focused, right? So we have a bigger share of NVIDIA, Microsoft, blah, blah, blah. You know the tech companies. You know what I'm talking about. And then my third largest, or I guess technically tied for second largest holding, is actually Apple. So I specifically really like Apple. Same thesis I had in my previous video. Use the phone. I'm filming on that phone right now. I use a ton of their products. All my friends use the product. Again, status symbol thing. And then my fourth largest holding is actually Home Depot. I haven't added any positions to this over the past 2 months of summer. Currently sitting at just under $1,000 invested in Home Depot. I like this company a lot. I like to build things. Enough said. Then this is a new holding, VUG. So we're gonna click in on this one so you guys can see exactly what this is. This is kind of like VGT, but even more skewed towards smaller cap and mid cap stocks, which tend to mean that there's more volatility, more room for growth, while also having more room for L's. As you can see, I have $717.91 invested in them. This is a new holding for me. Super excited about it. I hadn't added many new holdings in a while, and so having this job over summer really opened up some capital and having an extremely low overhead. Shout out to living at home. But yeah, that's enough on VUG. I'm super excited to see where that one goes. And then moving down to Disney, we have $563.84. Probably going to sell out of this at some point. I don't really like Disney anymore. I did see Deadpool and Wolverine though. That movie was fire. You should definitely go see it. And then going down to SOXL. So this is a semiconductor ETF. I just bought in 10 shares. This is a new holding as of probably just last week actually when I bought in. So this is primarily focused on NVIDIA, AMD. As you can see, down 7.5% today. Not too worried about it because again, my portfolio is only 2% comprised of this semiconductor ETF, but you know, with AI chips and things like that, I think it's pretty important to have at least a little extra exposure to it. And then moving down to Kava, I love Kava. I bought a couple more shares this month. I think they're great. Food is a little bit pricey, but personally, if it was between Chipotle and Kava, I'm taking Kava. Philosophy is kind of just invest in companies you know, and the rest is pretty easy. Moving down to Starbucks, they have earnings coming out later this week or maybe early August. I'm not sure which one, but I really like this stock because I like coffee. Then going down into Walmart, broke college student. They have affordable stuff. That is the same thing as last month. These positions have not changed down here. Starbucks, Walmart, Realty Income, and Stewart. None of these have changed. And then my last two holdings, don't even really want to talk about these much. Real estate investment trust, super low key, almost no money in them. Kind of just have them for the recurring dividends. Which brings me to a good point. It's now the time in the video that I want to talk about dividends. So passive income, that's exactly what I said at the start of this video, and here it is. So when you invest in stocks, there are certain companies or certain ticker symbols that will pay you out, whether it be monthly, annually, biannually, or for most companies, quarterly, which is every 3 months. They will pay you a certain amount of money, a certain percentage of the stock price, as a way of agreeing that since you put in capital that they can invest in their company, they're giving you a portion of that back. So starting with my smallest dividend, it was 29 cents this month from Realty Income. That is that O symbol. Very small amount, but they pay out monthly, and I do like to see just a little bit of that passive income rolling in. Then keeping with the real estate investment trust, my second dividend this month came from Stewart, STC, at 77 cents. So between these two companies, I got a whole $1 in passive income this month, baby. That's right. Give me my Lambo. Obviously, that is an extremely small amount of money, but again, it's completely passive, and these next three that I'm about to talk about are much bigger. Maybe not these next two, but this last one definitely is. So coming in at my third dividend this month was from VGT at $2.45. So that was that technology fund I was talking about earlier. The reason why I really think this one's cool is because they are a growth ETF and they have appreciated almost 40% in the past 2 years. So not only have they been the best performer in my portfolio, but they're also paying out passive income to me just for holding on and having my money almost go up 50% in 2 years. Then moving on to my fourth dividend this month, it was $2.71 from Disney. Shout out to Disney for this one. Pretty good. Always good to get free money. And then my largest dividend by far, I mean, I'm talking absolutely blows these other dividends out of the water by tenfold, was $37.57 from VOO. So this is the S&P 500 ETF. This is where the bulk of my portfolio is. And $40. Boom, just like that. So that brings my total dividend amount to almost $43 off the top of my head math. The total number will be right here. But yeah, that money, that amount is just free money just for 1 month. So when you extrapolate that across 12 months in here, you can see how that really starts to add up, especially when you pair it with stock appreciation. And so there it is, guys. That is my $20,000 portfolio broken down as a 20-year-old. Hope you guys enjoyed watching this video. Hopefully I could bring you something of value here. If you're new to investing or returning, make sure to stick around because I am all about that on my channel: entrepreneurship, investing, the stock market, personal finance. Let's make money. If you like money, this is a great place to be. And if you're still here at this part of the video, chances are you might like that video right there. So just give it a click. It's super cool. I think you'll like it. Thanks for watching. See you guys.